Good evening. It's Quant Trade Edge and it's Sunday, March 5th, 2023. I just wanted to provide an update on the ongoing potential rally in natural gas. And if you stay to the end, I have a new pattern that I'll explain called the congestion zone, and you'll see how well it has worked so far in natural gas. So on Friday, we did get our seventh close above the 5-period simple moving average. That typically indicates that we have an outlier going in the direction of that, which is up. However, you typically want to see a flag form from a position like that. You want to pull back to be a flag, and taking a flag on a lower time frame like a 120 or 240. But looking at this, it's actually pretty clear that that was a bit of a climax, and we have a gap and trap currently. So this does not look like your typical 5-period SMA pullback. If you remember from the last video, we were looking at this loss of momentum between these three highs, where we had lower highs, in the RSI, and we said this either could be a running flag or it could be an early form of divergence. And it turns out it was a running flag. We got that final pop, and now we got this gap down. So on the daily chart, another thing that we could have been looking at, which I wasn't looking at the time, is the 2-period rate of change. And you can see that, from this extreme negative to this extreme positive was a very strong launch in the 2-period rate of change. And after we had this running flag here, this final push-up came on much lower momentum. And that's also a divergence on a 2-period length indicator versus this divergence that we initially saw on the RSI 14, on the 14-period indicator. This is more of sort of a long-term heading up. This is more of a short-term need to relieve some pressure. So again, I don't want anyone to lose sight of the fact that we still haven't changed bullish structure. So what I'm going to do is take all of these indicators off and go back to our Gann bar counting indicator. And you can see that off of this lowest low, all we have so far is one swing up greater than the previous swing down. So what we do need is for this at some point to bottom. It could be there, it could be here. There's no telling. I mean, this could really go make new lows. There's nothing that says this has to go higher based on this structure. On this structure, all we have is one leg up. So once we have a test back down, and then we start going up, taking out this exact high of 3027, that will trigger the U-turn and the change of trend from downtrend to uptrend. And that will be typically a low risk entry point to either buy stop, or once that gets taken out, find a tiny time frame, little ABC or other type consolidation pattern to go from. And that gives you an even tighter stop to work with. So that's what we're looking for in gas there. The other thing that I'd mentioned earlier that I would show you is something called the Breakout Fakeout. And it starts by something called a congestion zone. So let me take all of these things off that aren't necessary. It's the blue dots. Take everything off and just focus on the actual bars and the structure. What each of these dots indicates, and we can go back quite a ways. This is it's almost a year back. Wow, it is a year back. What this bar indicates is 3 consecutive bars in which you have closed inside the range of the previous bar. And that basically makes it a congestion, because if you're able to break out above yesterday's high and close there, that's usually a good sign that you're not in a range, you're in a trending market. But when you keep closing inside of the previous day's range, that is a sign that you're in a consolidation or a bracketing market. So here, you can see that this closed inside of this range, this closed inside of this range, and this closed inside of this range. And the typical trade is what we call the breakout trade. And the breakout trade just means once you take whichever direction you go from there, you follow it. So here we broke below it, and you see that there was 1, 2, 3, 4 days of follow through with lower lows. If we go back to the start of this down move, we had a congestion zone up here where this bar closed inside of here, first one, this closed inside of here, second one, this closed inside of here, third one. When this got taken out, we got quite the move to the downside. Over here, this one's not as dramatic, but the same structure held. When we took this high out, we went higher without taking out the low of that bar. That would be your stop. And as you'll see, when we get to the breakout fake out, it would be your stop in reverse. But again, that didn't happen. So far we have one that won here, 2 winners, 3 winners. Same thing here, 4 winners. This pullback that came subsequent didn't actually take out that low. And you had your move higher. Here, same thing, it gapped, so this wasn't as clean as just sell stopping below, but if you were waiting for the move back in, you could get close to that entry. And there's a move. Now, this is the first time that the breakout didn't actually work. And typically what happens from a consolidation area is you will either have a breakout and it works, or you have a false breakout and then you get a real trend in the other direction. So we call this the breakout fake out. And here, based off of this bar, you would have shorted this bar here, but then once you took this bar back out, you reverse and go back to turning out that this was a breakout fake out. Over here, we started this rally with a breakout fake out because this initial thing was a down move, then we had an inside bar, and then we shot up to the upside. And then each of these two are just regular continuation upsides, where this continued from this congestion zone, and this continued a few days from this congestion zone. So on a fake out, you obviously lose your risk on the initial breakout. So in this case, the size of this bar, which is 14 and a half cents. But then when you catch the breakout to the other side, you're talking about 5.05 to 5.99. You're talking about 95 cents to the other side. So again, the idea is finding places of congestion where if the market breaks out, your stop is relatively low relative to how far the breakout can go. And even if the breakout fails, okay, you're going to lose on that first trade. But again, it was a tight risk trade. And then you have a similar amount of tight risk for the same move in the other direction. So there's numerous ways you can play this. You could assume every breakout is going to be a breakout fake out, and you miss all the breakouts, which no harm, no foul. You're not losing money on a missed breakout, but then you're making money on all of the fake out breakouts. That would be a way to trade it to reduce the number of losers. But I bet that if you look at a large number of these trades, taking the breakouts and eating it when it doesn't work and reversing into the fake out breakout will give you the most actual return, most actual dollars for your trade. This here is June of 2022, so already 9 months back, and perfect breakout. Kept going. This one, breakout, kept going. This one is this bar right here. Went up, stayed way above where this would get stopped out. So a breakout, 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 fake out, breakout, 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 fake out, breakout, 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 breakout have all been winners. As we get further and further back, it's probably not the greatest chart to look at since this wouldn't have been prompt at the time. I mean, it wouldn't have been prompt for a lot of this, but the further you go back, it starts to look a little stranger. The bars get really small and don't make as much sense. But natural gas is a particularly good market for this. I think a more mature market that ranges more wouldn't show as many winners as something like natural gas or hogs, I would imagine, just things that move a lot swifter. So anyway, that was the breakout, the congestion zone, and the breakout trade and the breakout fake out trade, all in the context of what we're seeing right now. And in what we're seeing right now, I just want to make sure that people aren't trigger happy and just getting long for the sake of it, because as we've mentioned, the structure is still not bullish. This is the first part of becoming bullish. It's a swing up higher than the previous, larger than the previous swing down, but we still need this to stop going down at some point and turn around and break through 3027. and that would give us our trend reversal to the upside on natural gas. Anyway, keep leaving those comments. I love to see them, and ask any questions. I'm happy to do my best to answer them. Have a good evening.